Hey guys, what is up? It's Dusty here and welcome back to another episode of the Daily Crypto News. And today has actually been quite a bad day for crypto. I mean, if we take a look at the crypto market, we're down 2.55% today. I think I have the reason as to why it's going down, but the majority of cryptos in our little list here are not doing so positive today. I think one of the reasons we're on the downturn right now is because the S&P and Nasdaq are basically following the same line. You can see how far down they are and how bad they ended this week. It's definitely not that good. People in the comments section have noted that it might also have something to do with the very strong dollar that's up and coming right now. We can see the US dollar index just going crazy right now. Over the last couple of months, it's acted really positively. I honestly expect as well that it has something to do with this little demand zone here for Bitcoin. Bitcoin right now is retesting one of the most important zones. And again, guys, if you're looking for a good platform to trade on, make sure you check out Bybit. A link for that is going to be down below as well. You can trade almost anything on there. It's the exchange I always use for everything. A little side note, guys, I want you all to press the like button on this video. Ever since the crypto market started tanking, I also noticed that the people that comment, the people that press the like button, and the new channel subscribers, basically they deteriorate, which is logical, happens every single bear market. Every single day crypto is negative, the positivity turns into hate, but I want to see if this video can still get to 500 likes, even though the crypto market is going down. And also remember that we are doing a 2500 XRP giveaway, and the winners are going to be announced in 13 days from now, as it's going to be 5 different winners that are going to be picked, and all the ways you can enter are listed here. You can either enter via YouTube or via Twitter or via all of them to get extra entries. It's very simple, but make sure you go ahead and check it out. A link for that is down below, by the way. Alright, and then I have a very interesting article for you guys. Over 158,000 crypto traders lose all their funds as Bitcoin bows to the strong dollar. What it reads is that there were 158,000 liquidations for the day, totaling $400 million. The largest single liquidation occurred on OKX. A Bitcoin USD quarterly transaction failed or valued at $3 million. And remember, guys, I tell you all that I think trading is nice. Trading over on Bybit can be done with leverage as well, where, again, there's a chance to liquidate, and there's a good and bad side to it. The good side is you can make a lot more money that way. The bad side is if you really mess up, you mess up really. Yeah. Having said that, as I described earlier, the demand zone for Bitcoin is holding quite nicely right now. And honestly, we are expecting a bounce for Bitcoin, as we've done so in the past quite significantly and quite a lot of times. We can clearly see that Bitcoin did get rejected at the EMA ribbons earlier, and right now we're most likely facing a little bit of a convergence, so to speak, where we're not really going to break above. And once it happens, it can most likely be very bullish, and we're not really going below, and unless we do so, it's not going to be too bearish, but once we do break below, that wouldn't be too nice. I have to push myself all the way to the side to be able to read this one. Macroeconomist Raoul Pal issues mass liquidation warning, says every market position you have is likely wrong. So even though from most perspective it looks as if a good bottom is being formed right as we speak, we can clearly see that a lot of people got liquidated right now, and once that happens usually, the market is a little bit less bullish because all those bulls got taken out. Raoul Pal says global markets are locked in mass liquidation phase, and he doesn't expect a turnaround in the short term. In a new interview, he says no matter what's in your portfolio, more pain is likely in store. For now, Pal cites the US dollar as the only asset that may remain strong, which to me is interesting because you'd most likely already agree with me here that the US dollar isn't really a very safe asset. Depends a little bit on how you view it, but I think with the inflation that's ongoing, it's not really the best thing to have because you're always losing. But I guess in terms of the dollar index, yeah, it is quite a nice one over the last year. Now, this is an ugly market. Ooh, let me turn that off, the sound. There we go. All right, this is an ugly market. What I think is going on here is there are two factors for the market to digest. One is inflation, and that created the market to set up in certain ways. Everyone's crowded into certain things, then growth starts evaporating. You can see it all over the place in stuff like consumer discretionary stocks. You can see it in the forward-looking indicators. So the market has to deal with the inflation plus slowing growth. And what that basically means is everyone hit the liquidate button So everything's getting liquidated. This is the correlation of one-star markets that I was warning about, and it hits everything from crypto to pretty much everything, and the thing that stands above all ends up being the dollar, because that is the kind of safe haven. I disagree very much so. We've seen some huge moves in the dollar, and I'm not sure it's entirely done yet. I can't agree with that part. I can't agree with that it's kind of a safe haven, but what he's trying to describe is that in periods like this, where there's huge inflation and the growth is actually decreasing as well, it's one of the worst periods which you can have because things are getting more expensive, and theoretically speaking, things are getting more expensive, there's more profit being made, and eventually they increase the prices because they can, right, which again is that inflation that we talked about. But usually that is basically a good factor for the economy, or at least it's showing that things are doing well. And again, remember what happens when you turn the interest rate down. Once you turn the interest rate down, borrowing money becomes cheaper, saving money becomes less incentivized basically, and you start getting more people spending their money and things actually going up more and more and more. But when the growth is stagnating, yet the prices are all going up, it's kind of the opposite of what you'd like to see. And he's kind of saying that people are kind of getting into safe havens and getting rid of everything, so to speak. Now, so there's a massive liquidation going on as people struggle with their portfolios because basically whatever position you got, it's wrong. And that's the pain everyone's going to have to take for a little while. If I'm right, and that inflation story is going to change and growth is going to go slower, then we start shifting into a dynamic where we question what the central bank's going to be doing. If the bond yields are going to come lower, stuff that's really beaten up like the further end of the growth stocks, they should be more interesting in that environment because they got killed off by inflation. I think gold does pretty well. Interesting enough, gold and growth stocks tend to do badly as real rates start tightening, but they got to zero, and it looks like the world's falling apart just as the central bank is trying to undertake quantitative tightening, or at least no quantitative easing. And if that's the case, then real rates are going negative again. And if I'm right, that's usually good for gold, crypto, long and growth, that kind of stuff, and bad for everything that people have been in, like commodity stocks and the rest of those things. Then we're heading over. The Ripple SEC legal brawl could be a game changer for crypto. The protracted brawl over whether XRP is a security could drag on into 2023, but the company and crypto advocates see increasingly optimistic signs. I do want to point one thing out really clearly right now, and that is that regardless your thought about Ripple, regardless on whether or not you think it's a security or not, just understand and agree with me here, I think everybody does though, that this lawsuit is going to change a lot of things around for crypto. I mean, straight off the bat here, we don't know if they are going to win. We don't. I honestly believe they're going to, and I'm putting a lot of money on the fact that they are, but we don't know for certain. But more importantly in that nature, we do know, sorry for screaming a little bit, we do know that the consequences of whatever happens in this lawsuit will stick around for a very long while. And I think that's actually more important if you think about it. If Ripple does end up losing, I think Ethereum's going to go down hard too. XLM's going to go down hard too. A lot of crypto is going to go down hard as well. But if they do end up winning, I think it's going to be a really positive rush for altcoins, but most importantly, a rush for XRP and a longer term growth for the crypto market. Because what is it present, or what is it said in paper? It's said on paper that the SEC cannot now allege anymore all these really easy little jabs of, hey, cryptos are securities by definition most of the time, unless some really specific scenario points them out not to be. Because now there's some case law which suggests, well, no, it might not actually be a security that often. Take a look at Ripple, right? Take a look at what was discussed in that case. All these different points make it so that any crypto that looks like Ethereum or looks like XRP, for example, is not by definition a security anymore, unless some factors are different. Again, it makes it also difficult because we don't really know how the SEC classifies these things. That makes the whole scenario a lot more difficult, but I think eventually it will fix itself though, so I'm not too worried about it. Having said that, let's move on. Bitcoin very likely to go to zero, says Warren Buffett's right-hand man. All right, another time. I mean, he's very much richer than I am, so from that perspective, I gotta give him a couple of credits for some kudos for whatever he's saying. But neither Berkshire Hathaway CEO Warren Buffett nor his right-hand man has warmed up to Bitcoin. At the end of the day, though, it's a different opinion. He says he wouldn't even pay $25 to buy all the existing coins in circulation. I wouldn't take it because what would I do with it, said the Oracle of Omaha. Berkshire Hathaway Vice Chairman Charlie Munger took aim at Bitcoin during the company's annual shareholder meeting in Omaha, predicting that the world's largest crypto will very likely collapse to zero. CEO Warren Buffett doesn't know whether Bitcoin will go up or down in value over the next few years, but he still doesn't want to do anything with it. The 91-year-old entrepreneur, whose net worth is estimated to be $124 billion, has reiterated that Bitcoin doesn't produce anything. Buffett said he wouldn't pay, again, $25. One of the most famous investors of all time claims that Bitcoin stands no chance against the US dollar. Munger was even harsher in his critique of the world's largest crypto, describing it as stupid and evil. The billionaires believe that it undermines the US Federal Reserve, which the US desperately needs, as reported by you today. He also likely likened the top crypto to a venereal disease in February. Buffett also harshly criticized Wall Street for turning the market into a gambling parlor. He believes that the financial industry encourages risky behavior, and I think that's partially true, but there's also logic behind that. Encouraging risky behavior is, again, encouraging for the, I don't want to say underprivileged, but the people with lower amounts of capital to make bigger amounts of capital, realizing that turning $1 million into let's say it differently. The whole journey of actually becoming rich in the first place is obviously way harder than going from rich to extremely rich, so to speak. On Wall Street, what they're encouraging is quicker money. And they are encouraging taking higher risks for higher returns very often because it's other people's money that they're playing around with. Is it good? Is it bad? Well, it's a different style. And Warren Buffett and Munger, they got rich off of slow, steady winning the race, which is not bad, but a lot of people would rather have, let's say, $1 billion now and never get any more and have a lot of risk in that versus $100 billion 60 years from now, while having nothing at the start, if you guys get my drift. So a lot of people would rather have some quick money with it being bigger risk and maybe not as much in the long term versus a lot over the long term, but really slow coming up. Then again, him calling out Bitcoin, it's a preference. We described before how they're from the older generation. They have a lot of their money, most of their money in asset classes which are really far away from crypto, so to speak, and it's most likely bad for them if crypto were to take over, so understand that they'd be against it. Then we have the Cardano news though. Cardano price nosedives as analysts argue Vaso hard fork is months away. Now, I'm not exactly sure what they define as nosedive. It is down 4% today, which is generally what the market is going down for, so I'm not exactly sure why they're calling out such a heavy name on it. But apparently, proponents believe the Cardano community won't see all options and enhancements immediately after the Vaso hard fork. Cardano blockchain could take weeks and months to complete DApp related updates, and I've described to you before, Cardano needs a couple of key stepping stones, one of them being this native stablecoin, which we described before, and they need a couple of their hard forks out the way that they've been hyping up. Now, for Cardano, though, it's very important to always have the next update en route because that's what makes Cardano big, having a really broad idea and narrowing it down in certain epochs, basically, but always developing throughout the journey and always kind of showcasing to the people what has happened, what we were going to do, so to speak, and kind of closing that up in chapters, which again is called epochs. So every single time they complete one, so to speak, people get pretty excited about it. But if something is stalled or if it's not as big as was anticipated, people take it really heavily with Cardano, I've noticed. Then again, Cardano is a really tight community. I don't think this is going to be too bad, but people have been waiting for these DApps, and since Cardano is already late to the later one race, we've already waited for like grants and such, and right now for Cardano, it's a little bit of a bigger hit to the people, specifically because DApps is like their main little selling point right now, the idea that they're going to get really big in that regard. Apparently, the report of IOHK, which is now IOG, I believe, right, revealed that the updates for DApps in the Vaso hard fork, the decentralized applications on the Cardano network, would wait for months before an update. Proponents believe the delay in implementing the hard fork could negatively influence Cardano's price, since the Cardano community won't have access to all options and enhancements associated with the Vaso hard fork right away. It could take months before Cardano-based DApps offer these updates, which again is not that juicy, but it's not a really big problem. It's just not as good as it could have been. Then again, guys, right now, what I'm doing in the crypto space is just hoarding like mad. I'm not really selling any altcoins right now because I notice, they're down 80% already anyway. So I'd rather just hold on to them and wait for the better days to come yet again. I remember every single bull run we've been through now, every single time I'm like, if only I kept those altcoins. If you just understand how much Cardano I held at one point or how much Dogecoin I held at one point, but I was like, nah, I should sell it for something else, or I should just, yeah. But it was like Dogecoin was worth absolutely nothing. Cardano was worth like a cent, maybe 2 cents maximum. And it was kind of expensive at the time. Yeah, funny. But alright, guys, that was it for today's video. Hopefully you all enjoyed it. If you did, make sure you press the like button and subscribe. And I will definitely see you guys again in another crypto video. Adios.